those who don't know me, I go by the Profitologist or the Entrepreneur CFO. So I'm the president of Diamond Equity Advisors, a SEC approved, state registered investment advisory firm located in Columbus, Ohio, with customers and clients across actually the country. Also, too, in addition to being an advisory firm, we are actually a business consulting firm. With that being said, I'm also the creator of the PASS membership program, which is short for the Profit Accelerator Small Business System. And what we do in that particular space is we help 6 to 7 figure entrepreneurs prevent financial suicide by accelerating their cash flows so they can scale their business and see real double-digit cash profits in their bank accounts. So that's who I am. We can kind of get more into my background later on, but I'm super excited about this particular training session because I have Amber Whitehead with me, the tax lady in the building. And it's
Right.
tax season, right? It's tax season. And if you're an entrepreneur, a small business owner, you're either feeling one or two things right now: crazy anxiety and stress because it's tax season, or you're feeling
Yeah.
pretty good about your situation. It's usually one of the two, either or. So
Right.
Amber and I decided, you know what, let's get together, do a quick segment here, just to share some information and some strategies that help guide our entrepreneurs and small businesses in the right direction, because we don't want this time to be a stressful time for you. This should be a time where you have all your ducks in a row and you feel comfortable going to the tax season because of the direction and advice that you got from your team. So with that being said, Amber, please introduce yourself. Tell us, I know you're the tax lady and I know you're the bomb at what you do, but for my clients who may be checking us out or some people tuning in, tell us about, what you do and how you help entrepreneurs out.
All right. Well, thank you again, Perry, for putting this together, because this is pretty awesome, because it is very important that especially small business owners know what they can do and what they can't do in regards to their taxes. So again, my name is Amber Whitehead, aka the tax lady. I'm a IRS enrolled agent. And so what that means, because a lot of people are not familiar with what an enrolled agent is, they hear the term CPA a lot, but they seldom hear EA. So an enrolled agent is the highest credential that the IRS gives to tax professionals. You have to go through a rigorous exam and pass that, and then you got to keep up with your educational credits going forward to maintain the license. I've been doing taxes for over 15 years, but this year has been the first year that I decided to niche down into servicing the small business owners, because I am a small business owner myself. So I'm more passionate about that, because I see that there's a lot of people that are misinformed when it comes to what they can deduct and what they can't deduct. And
Awesome.
so I'm able to do taxes for everyone in all the states, because I am an enrolled agent. So I have licensing in all states. I also can help settle people's tax debt. I just recently had a client who owed $32,000 to the IRS, and we was able to settle for $25. So I'm able to do those type of things. If you are having trouble with the IRS and with audits, I'm able to represent you in that as well. So I'm definitely a one-stop shop for anybody who is looking to have a dedicated tax professional on their team.
Awesome. Well, Amber, first and foremost, man, thank you for joining us. And before we get into some of our topic talking points and whatnot, everybody who's on this call, if you followed me for a while, you'll hear me say this. You can get information in a couple different ways. So you have opinions, you have information, and you have advice. So opinions, if you heard that old adage, opinions are like XYZ. Everybody has one, right?
Right.
Other people's opinions don't apply to your situation, because those opinions have been formed by their personal experiences, which may have nothing to do with your current situation or what you're about to go through. So opinions, quite frankly, I take those and I throw those in the trash. Then you have information. So information is data that's based upon some factual, content, where that can be researched and verified, right? So you have information, and in this information age or this technology age that we're in, information is abundant. So you can get information from Google, you get information from YouTube, right? There's a ton of different
Right.
places you can go get information, right? And it's good to have information, but unfortunately, because there's so much information, you may not know what applies to you. And then
Right.
you have advice. And advice is where you really move the needle, because advice is information that's given to you from a expert. I'm gonna say that again, an expert in their field with proven results, and they're providing information to you based upon your specific situation. All right.
Right.
So it's not the blanket piece. So what's really dope about this is that, I've been in my industry almost 20 years. Amber says she's been doing her piece for almost 15 years. And on top of that, I'm going to get into my credentials. We'll focus on Amber. She has one of the highest credentials that you can get from the IRS. So with that being said, you now have access on this call to experts, not people who are, hey, this is my opinion, this is what I think you should do. No, we don't play. I don't play those games, and neither does Amber. So that's just really, really exciting to kind of have another expert on here with us. So let's just jump right into it. And I know, Amber, you have some things that when it comes to entrepreneurship that we wanted to touch base on. So one of the things you had right here was, entity structure. How do you structure your business as far as, maybe being a sole proprietor, a LLC or partnership, etc. From what you've seen in your particular space and advising your clients, why is it so important to understand how you're structured? So let's kick it off there.
So one of the reasons why it's very important to know how to structure your business is because you want to make sure you are set up in the correct way to either, one, maximize your tax obligation, or to make sure that you are covered with a certain type of protection, right? So what I usually do with clients that first come to me that say, hey, you know what, I'm thinking about, starting a home-based business, or I'm thinking about starting this type of business. I always tell them from the beginning, start off as a sole proprietor, right? Because you want to make sure that you are serious about doing that business. It makes no sense to go ahead and start filing with the state, getting your LLC and doing all of that. And then 2 years down the road, you're like, I don't want to do this no more. You just wasted a whole lot of time. So I advise people to start off as a sole proprietor, get your feet wet, make sure this is something that you want to do. And then if you really feel like you're putting in the effort, the work, you're getting your clients, you're getting your name out there, then let's move up to the next level and get you established as an LLC in your state. But it also depends too, because I know some states have certain requirements that based on the business industry you're in, you have to automatically kind of just start off as an LLC because it's permits and licenses that's involved with all of that. So if that's the case, then that's a whole nother, another thing we have to think about. But once we do the LLC, it's my job to watch how you are growing in that business as far as income wise. Because at a certain point, if you start profiting, I would say at least over $40,000, you would want to consider yourself to be considered LLC taxed as an S corp. Why? Because when you are on a Schedule C, you are subjected to self-employment tax of 15.3%, right? On top of that, not only do you get taxed on that, but then you get taxed again on the ordinary tax rate, whichever tax bracket you fall into. So you're getting taxed twice. So if you become an LLC taxed as an S corp, then the IRS says now you have to pay yourself a reasonable salary. And that reasonable salary can now be deducted from your income. So if you made $100,000 profit, and according to your research, it says you should be paying yourself $50,000, you now write off that $50,000. So now you only have a net profit of $50,000, but on the S corp, that $50,000 is not subject to self-employment tax because you get what you call a K1. That K1 then gets reported on your personal return, and that is what is subjected to ordinary tax. So you save yourself a whole lot of money, because if you're just strictly a Schedule C, you're almost paying anywhere, I would say, between 24 to 30% of your income because of the double taxation.
Word. So let's hold right there, y'all. So Yo, that's crazy fire. Now it's technical, and I understood exactly what you said, but it's absolute fire. So just as I was taking my notes with that, Amber, how you set your kind of just some takeaways here for the listeners. How you set your business up has an impact on your taxes, and that's the first thing that I think people need to realize is like how you organize your business is going to impact your taxes.
Right,
And I like what you said there. You know, if you're not really serious about this, you just getting your feet wet, you can set yourself up as a sole prop, and I can definitely see your point on that. And then with respects to moving forward and moving into an LLC and whatnot, totally get that, just to give yourself that protection from a limit liability piece.
right,
What you said was absolute fire here, because most people don't realize that you can be a LLC and file as a S corp, as an S
mhm,
corporation. That's actually how
right,
I'm set up. And with the clients that we work with, who are usually doing that 6 to 7 figures in top line revenue, they're kind of above that threshold you were talking about from a profitability piece where it makes sense. Understand
right,
this, y'all. Your tax bill, whether we're talking about your retirement, current income, business income, your tax bill is always going to be one of your largest bills. So you better
right,
have a strategy around that, because by not working with a tax professional, if I have this correct right here, Amber, you could be paying an additional 15.3% in self-employment tax because you wanted to go and file your taxes on your own. Or holler at that cat who doesn't deal with doesn't deal with entrepreneurs or small businesses. So you just
right.
threw 15% of your money
Ugh,
away, y'all. I mean, let that sink in for a second, right? You know what I'm saying? If you're doing 100,000 and I'm only back into numbers. Nobody wants to throw away any money, let alone 15% of their paper, because it's not about how much money you make, it's about how much money you keep. So that's
right,
absolutely fire right there. So man, if y'all didn't get that, man, I mean, we could shut this live off now and be done with that whole piece, because we just put 15% back in your pocket. Okay, so that's
right,
amazing right there. So I'm an advocate of the whole, I'm an LLC, I follow as an S corp. Totally get that. That's absolutely awesome. Fire.
right.
Okay, so the next piece we had right here, and I'll try to fill some of these questions. I'm trying to carry a
Yeah, I'm
couple
trying to
different
read
things.
them too.
Yep.
Sarah had
Yeah.
one.
So as they come in, so what we do, yo, we're gonna try to circle back to the questions and kind of get through everything. We get through some of our talking points, and then we're gonna leave some time at the end for Q&A. So please definitely type your questions in, whether you're on Facebook or you're on the Zoom. All right, next one you had right here, Amber, was kind of understanding the difference between a CPA and an EA. So you got your certified public accountant, and then you
Right,
got your enrolled agent. So
correct.
look, real talk, what is the difference between the two?
Right. So before I actually go into the difference of that, I want to actually talk about too the different other tax professionals that are out there that people need to be aware of. Because one of the things that I'm not sure a lot of people know, that you don't have to have any education at all to become a tax professional. Little Ray down the street, he can go hang up his shingle and say he's doing taxes because he has this software that's going to basically guide him through and ask him all the questions that he needs to ask that person in front of him. So it's definitely a very easy industry to enter into. So I'm always telling my clients to make sure, or not just even my clients, but just in general, I'm telling people, make sure you pick wisely, because you want to make sure that you're dealing with someone who knows what they're doing, and then just didn't wake up one day and say, hey, because I know this is a lucrative business, let me just go ahead and start. And then plus also, you're giving this person your whole life in the palm of their hands, because they have your social security number, your birth date, your address, your bank account information. You got to be careful. There's so many tax professionals now that are getting locked up. I get news all the time about this tax professional getting locked up after 6-8 years of committing tax fraud on their clients, and now their clients are having to get the bill because they signed off on it.
Mm,
And that's the burden, because once you sign off on that tax return, you're signing off to saying that everything in there is true.
mm.
So that's one thing I always want to just put that out there. If you are going to hire somebody, you should definitely look at a person who is a CPA or EA. Now the difference is, with a CPA, they're only licensed for that state that you're in. Okay, they have to have education. You got to go to, you have to have your bachelor's degree. Sometimes you can have to get your master's, but I know there's a certain education requirement, credits that you have to have, and sometimes people could do it in 5 years versus getting that extra degree as a master's degree. Then from there, they have to take a 3-part exam. But not all CPAs are equal, because you have some CPAs that just focus on the accounting side. They'll know how to do your financial statements, how to do your accruals, how to do financial planning, all of that good stuff. But they don't really know the tax law because they're not interested in that. But they'll do your taxes, but they may not have all the up-to-date information.
Okay.
Right? So you have to, if you want to deal with a CPA, make sure you deal with a CPA that is strictly doing taxes and not everything else. So what an enrolled agent is, like I said earlier, it's the highest standard that the IRS gives to tax professionals, right? We also have to take an exam as well to get that accreditation. We are able to practice in all the states, so we're just not limited to the state that we live in, and we can represent you in audits and tax resolution. The CPA can do that as well. But there's a distinction as well with enrolled agents, because some enrolled agents strictly just deal with tax representation. They don't know anything about the tax law because they're just trying to help you resolve your debt or get you through an audit. Then you have EAs who just strictly do taxes and don't even do the resolution side. So you have to really make sure that, you pick, wisely, pick someone that's in your industry. Because I always give up the example that when you go to your primary care physician, you go there, right? They're just going to give you the basic, general, your physical. But if you end up having a heart problem, they're not going to treat you. They're going to outsource you out to the cardiologist, the specialist. And that's the same thing when it comes to picking your tax professional, that you should find someone that specializes strictly in your industry. And not just someone who just does taxes generally. So that's the difference between a CPA and an EA.
No, that's fire. So I've worked with CPAs because, as you know, I have CPAs on our team. We have bookkeepers. We have EAs, and it's so interesting for you to say that. You know what I'm saying? Because real talk, y'all, your business for a lot of us is our livelihood, right? You may not have any sources of income, so you got to get this right. And as you referenced earlier, Amber, we don't need to be going to Ray, who just threw a shingle up and got some software off of Amazon or something, and say, hey, I can do your taxes. So the point I want y'all to take home from this, which is absolutely fire, and this is, and it applies to so much, Amber, because it's not just your tax professional, but your financial advisor or your bookkeeper, whatnot. You want to find somebody who, first of all, has some credentials that they can show you to say, hey, this is what I accomplished, to prove that I have a certain level of understanding or expertise in this particular area. But also, too, you want to find someone who specializes in your niche. So I'll kind of piggyback off of that. I've been a financial advisor for 17 years, but my specialty is dealing with entrepreneurs. So you could talk to two folks who say, hey, we're financial advisors, and even maybe have the same licensing, but my skill set is going to be different than the person's skill set over here. So understand, after you find that specialist, and I love that example you use, I used it here recently. If I need surgery on my brain, I'm not really talking to my generalist. I'm talking to my generalist to get me a referral to the specialist, because real talk, like, I don't need the foot doctor doing brain surgery on my brain. I need the cat who does brain surgery all day, every day. So that's just a phenomenal takeaway, and thank you for sharing that. So you have tax professionals who may not have any credentials or may not have, kind of just saying, hey, this is what I do. And then you have your CPAs, and kind of just to piggyback off that a little bit more, I have a CPA who's actually a forensic CPA. So his specialty is going in and dealing in the court system and testifying and things of that nature. Now, granted, he does tax returns as well, but for you to say that made me think, like, yeah, you're going to have some CPAs who may not work a lot with. Just because you're CPA don't mean that you're the right person to help me with my business taxes. And also too, on the EA side. So that's fire, y'all. So if we talk about value bombs and takeaways, understand that, yeah, you want to find somebody with some licensing, you know what I'm saying? So we don't be rocking with Ray with our taxes. But after you find that person who's licensed, who do you specialize? Like, who do you specialize in working with? Because you want to work with the specialists, not the generalists. It's so crazy. I just did a post on it here recently. Okay, that's fire.
Yeah. Because even myself, like, I strictly deal with service-based entrepreneurs, so or the home-based ones. So like, if you are hooked up with the MLL company, like you're selling Mary Kay or paparazzi or
Yeah.
whatever. I deal with those. Or if
Yep.
you're a graphic artist, designer, or a consultant, a landscaper, those are my people. I won't touch the, like, if you are into real estate and you're
Mm-hmm.
flipping houses and things, that's not my lane. You
Mm-hmm.
know, if you have a restaurant or a store that has a lot of retail, that's not my lane. So I know what lane that I'm in and who I'm looking for and what is more ideal for me. I'm not going to take something on that I don't feel comfortable doing. And
Right.
that's the problem. A lot of people do it just because they see the money.
Right. Wow, Amber, that's I mean, that's some fire right there, yo. Because real talk, that's and for you to say that, because everybody's like, oh man, I can help you, I can help you, but versus having that professional be like, yo, yeah, I have this title, I have this license, I have this designation, but my lane is this. You'll be better suited to go work with this person over here. So that just speaks to integrity, and that's another piece that we can talk about, y'all. But we're gonna keep it moving. But that's fire. Next we have here we kind of touched base on this one a little bit already, but just the difference between the generalist and the specialist tax professional. Is there anything else you want to add to that, Amber, with respect? Because I know we kind of got onto that a little bit, but is there anything else you want to add to that?
Well, I want to talk about, because I'm starting to see this a lot, just from like a lot of the forums that I'm on,
Mm-hmm.
that there's this thing called ghost preparers, right? So you want to make sure that you are looking at your tax return when it's done, and you want to, there's a bottom after where you sign, underneath that should be the name of the professional or the name of the company that prepared that return. So lately, all you see is self-prepared. That takes away the ownership from the person who prepared that return all on you, because now if the IRS comes to you and like, well, you didn't, well, it says self-prepared. You can't go back to Lil Ray and say he did it because his name is not even attached to that return. So those are
Ooh.
ghost preparers. And also I'm hearing that people, so-called professionals, are using TurboTax for their clients. So if you have to give your tax professional a password and an
To
email
TurboTax.
address,
To
that
TurboTax. That,
that
that,
means they're using that information, because you got to have different credentials to access TurboTax. So you can't use the same email and the same password. You got to have a different email and password for every person you do.
so red
And then
flag.
again, that ends up coming out being self-prepared too. And then they're charging you all this extra money, and they're doing it right on TurboTax. It's
So
crazy.
so check this out. Wow. So this is inside game we putting y'all on right now. So this is, so in short, this is what it's coming down to. This is the lesson, the value bomb takeaway right here is real talk. If you're working with a tax professional, they should be in a partnership with you, and their name should be on who prepared the taxes, not self-prepared, because you want to give yourself some level of protection so that when this is filed with the IRS, in case you have to go through an audit, something along those lines, you're not out there being held out to dry, that this tax professional, and that speaks again to the integrity piece and them being a professional, because if I sign off on your paperwork, that means it's official.
Right.
And I'm putting my brand on it, my stamp on it. So that's dope. I appreciate that. So had no idea folks was doing that, and that's
Oh
wild.
yeah.
They like, oh man, I need that email, and we're gonna run this through TurboTax, and that's bananas to me. Okay, next thing you had right here, you talk about the ghost repairs. This is a cool one right here. You talked about want to talk about audit triggers, and
Oh yeah.
I'll be the first to say, anybody who knows me in my space as the profitologist and being a CFO for small businesses, I give strategic advice on where we should move the monies and what accounts we should set up, and I have a really phenomenal working understanding of taxes, but I will always disclaim that I am not a tax professional. And even, excuse me, when I'm working with our members who are going through our PASS program, I always partner up with the tax professionals. Now, if they have their own tax professional that we can partner up with, we'll rock with them. But if they don't, we have individuals like Amber's and other tax professionals on our team who we can partner you up with. So kind of with
Right.
that being said, I say that to say, like, I know what I know, but I don't know what an audit trigger could be. So this, I'm taking my notes on this one too. So what are some audit triggers, please?
So a lot of people, I always get the question, what's the percentage of, me getting audited? How does the IRS determine whether to audit somebody? And this is kind of new information to me as well, because I saw tax professional, Juan Montez, and he talked about this, and I was really blown away. So I was like, you know what, this is something that I need to pass along. So there's an audit that's completely random. You know, you're just getting all the tax returns go in the bucket and they just pull something out, right? Then you have audits that are pretty much blatant, right? That it really seems like you're trying to do something funky, especially when it comes down to the earned income credit, because you have to be at like the sweet spot to order to maximize that credit. So sometimes when you are small business owners, sometimes people will lower their income by having excess deductions so they can get in that sweet spot, or they may up their income just so again they can get in that sweet spot. So if the IRS kind of can see that, then you're 9 times out of 10, an audit's probably going to come your way, right? Another thing, this is which was really cool to me that I did not know, is on your Schedule C, you have to put in, I believe, a 5-digit code, and it's based on the type of industry that you're in.
Okay.
So the IRS, they have, just say, okay, you're a financial advisor. So I don't know what the code is offhand, but they'll look at the aggregate of how much a financial advisor is making and how much their expenses they're taking. And if you are outside of that, then you're going to trigger an audit because they know what a financial advisor expenses and income should be.
Gotcha.
So that was pretty cool, because before I knew that, I used to just, sometimes I didn't really take the time out to really look up the code for that person. I would just put 999, but now I'm seeing the importance of that you really need to put the right code down, so that way the IRS can see, okay, you're a tax professional based on the past 5 years, whatever, this is how much they've made, and these are the type of expenses that they are deducting.
Man. Okay, so this got my mind racing over here. So that's absolutely fire right there. But from an audit trigger, if guys, if the takeaway with that one is really significant. So if you have that code, that small business code, you know what I'm saying, we've seen those where you plug those in and, hey, I'm in this industry, the IRS can actually pull those codes and be like, this is what you're supposed to be making. This is what the average is. And you around here trying to hide money to get tax deductions.
Right.
So I'm going to jump on this one real quick because I see this a lot when, well, let me, and I should have said this at the very beginning. So I'm gonna bounce from one angle, but I'm gonna head back to another one here in a second. So the deal is, as entrepreneurs, we run this strategy, this straddle, if you will, because one, we don't want to pay a lot in taxes. But two, you better show on paper that you actually make money, or somebody gonna come question like, yo, you've been in business a whole decade and you ain't never made a profit, right? So it's like, I get it. And I was helping a couple members through this piece because it's like, man, Perry, I'm trying to find all these additional tax deductions to reduce my taxable income. But when you do that, if you need to get a loan, a small business loan, an SBA loan, a mortgage, or some along those lines, and you're self-employed, right? They looking at your joint like, yo, you don't make any money. You can't afford to pay. So understand something, y'all. Having the right structure in place, being able to possibly do, that LLC filing as an S corp, and one of the biggest takeaways from that is that now you actually have 2 sets of tax returns. You have your business tax return and you have your personal tax return, right? And just having that structure in place can you position you better to move forward with your business, because you can't run your business for the eternity of the lifetime of the business showing a loss. You need to show where you made some money, but that's why we have our pass system in place to make sure that you can still show the income but still be able to realize that profit as well. So that's just major in there. And go ahead.
And to piggyback off of that too, when you're talking about the losses, is that the IRS has this rule that 3 out of the 5 years, you have to generate a profit, right? Because if not, they will categorize you as a hobby. And then they can go back to those 3 years and make those, take away all those deductions, and now you have to pay tax on that income. But sometimes people get a little confused about that, because they think, I have to make a profit in those, and not necessarily, because what the IRS truly wants to see at the end of the day is, are you really functioning as a business? Do you have a business bank account? Do you have an LLC? Are you marketing? Are you going to seminars to improve yourself? Are you doing these type of things? Because if you're doing those type of things and you're still getting a loss, I just say 5 years straight, IRS is fine with that because they're going to see that you are still in the business to make a profit. It's when you're just doing it just so you can hide money, or you can get that income tax credit, or you can lower your tax liability. Because that's a lot of reasons why some people start these businesses, because they know having a loss, and especially if you're a W-2 worker, can offset that liability. So that way, instead of owing, now you're going to get a little bit of refund, or you may not owe as much. So it's very key that you really function as a business if you are, getting losses. And another advantage is that you talked about, it's hard, especially if you're showing a loss when you want to get these loans. And that's why sometimes too, it's also a great option to become an LLC tax as an S corp, because why? You have to issue yourself a W-2. So now you have a W-2 to show that bank that you make this amount of money every single year, rather than just, your net profit or your net loss.
Love that, man. So you kind of open up the door for all kind of fire on here, and anybody who's joining us, right? We'll have the recording for you. You'll be able to obviously go look at the recording, and if you have any questions, type them in, because we're flowing right now and we don't want to mess up the mojo. But let's just cut right to it, because usually I'm the one accused for jumping on people's neck and calling it like it is and hurt people's feelings. Like, I think my clients who've been with me the longest, if I haven't hurt your feelings, you ain't a client of mine, because we get right into it. And what you said right here was crazy fire is, do you have a business or do you have a hobby? So real talk, y'all, let's just cut right to it. If you have a business, you have a business bank account. You are organized some way. Even as a sole prop, I set up solo 401ks for clients. Even when I set those solo 401ks up for clients, we still have to go to irs.gov and get a EIN number for that sole prop for that 401k. So if you're not set up fundamentally as a business and you have a hobby, that's the issue, is that a lot of people are basing their future wealth and their families own a hobby. Make sure you're set up as a business. You have to be set up as a business. And hey, y'all, anybody that's joining us, make sure that you guys make sure you guys mute yourselves, so we don't we can keep the flow going and all of that good stuff. But so you hit them in the head with that, Amber. It's a difference between a business and a hobby. I'll go as far as to say as a hustle, right? So have a business, like for real. You can smell a business. Having a business leaves clues. And one of them is, do you have business bank accounts? Do you have an EIN number? Do you have a separation of your business and your personal and all of that good stuff? So I just absolutely love that. Some talking points that I had that I wanted to hit on here, and we can kind of go back and review some of that too. Hold on one second here, because you hit us with so much value on this, right? I was just trying to take my notes and keep up here with you, because it's the hidden gems in there that was so crazy to me. But kind of let's get into the what I want to discuss a little bit is just some tax deductions, and we can go back and forth with this, Amber. Some tax deductions that people may not realize are even available to them. So again, y'all, instead of trying to hide the money and use the business as just a loss vehicle to reduce your taxable income, let's stop playing that game. If you're not writing a check to the IRS, real talk, that means you're probably not making the kind of money that you need to make. You know what I'm saying? And that's it. Now the deal is, the goal is not to write too much, to know what you can write off. So one of my favorite tax deduction strategies that I cover with clients around this season are the HSA accounts. So that's a health savings account, y'all. So write this down, and you can cash at me and Amber after we give you this value, because we're gonna put some money in somebody's pocket. All right, so
Amber the tax lady.
right. Show love. No, I'm just playing with y'all, yo. So we're doing this just for the love. So an HSA is a health savings account. HSA is the only account that has triple tax deductions. And I covered this through one of our past mastermind calls here recently, but it has triple tax deductions. Write that down. So an HSA account is an account that you can establish as and people think, oh, can you do this as a business owner? Yes. This is where it has the most value, not when you're a W-2 employee, but when you're self-employed. Because with the HSA, you contribute money to this account. The money that you put into this account is tax deductible, which means it reduces your taxable income. If you make 50,000 and you put 3,000 in, your taxable income now is 47,000. That means you're, excuse me, paying less taxes. Amber's happy, everybody's happy, right?
Right.
So one, you get the tax deduction on the front end. Two, while the money is inside the account, it grows tax deferred, so it can earn interest. So now you're not paying taxes on any of the growth. So a tax deduction when you put money in, tax deferred growth while it's in there. And third, when you take the money out for medical expenses, that money
Mhm.
comes out tax free. It's the only account of its kind. So let this sink in for a second. Does anybody on this call have medical expenses? Everybody on this call has medical expenses. So whether you're paying a copay, whether you're paying your monthly, you know what I'm saying, whether you're trying to cover your deductible, whatever the case may be, prescriptions, going to the chiropractor, we all have medical. I mean, going to Walgreens to go get you some Theraflu and whatever the case may be. Those are all what we consider qualified medical expenses. We all have them. So let this sink in. How about if you paid your qualified medical expenses with an account that gave you a tax deduction, and when you paid your medical expenses, it came out tax free? You're already spending the money anyway. And when the money goes in, you know what I'm saying, it's not making you look like you're crazy. You know what I'm saying? Like you got all these other tax deductions. You're funding your HSA. So I'm going to give y'all that one real quick. You know what I'm saying? That's just for the love right there. Yeah.
And I'm gonna piggyback off of that one too, because there's another thing called the HRA as well, the
Mm-hmm.
health reimbursement accounts.
Mm-hmm.
So if you have a lot of medical expenses, one of the techniques I try to teach my clients is that hire. So if you're an employee, right? I mean, if
Mm-hmm.
you own a business, open up a HRA account in the company name.
Mm-hmm.
Then you become the primary care select family plan. So now your wife, your kids, and all those people are covered. Because when you want to deduct your medical expenses, 9 times out of 10, because of the new standard deduction increase by doubling it, you no longer can write that stuff off on your Schedule A. But if you have an HRA plan, now if your kid has braces and they go into order now you can write off those braces on your tax return because you are being reimbursed from the company. So your co-pays, your prescriptions, whatever, anything that's coming out of pocket now is 100% write-off. So not only do you get to write off your insurance premiums, but now all those out-of-pocket expenses because you have an HRA plan.
Yo, I'm just gonna go ahead and just type my Cash App link in the joint. Because hey y'all, so yo, check this out. And I want y'all to really and again, I'll just interject kind of as things kind of drop in the spirit to share with me here. We are two professionals who do different things. And the deal is that's what you want. So understand some y'all, one of the biggest mistakes entrepreneurs make is going about this thing thinking they can do it all by themselves. You will fail in your business if you try to do it all by yourself. And that's just not me, you know what I'm saying, Perry, you know what I'm saying, being a butthole. I'm just going off stats. Anybody who knows me know that my degree is in math and a minor in biology. So I'm a real scientific type dude, and I'm a numbers and data driven type dude. The stats say 80% of businesses fail. And
Right.
one of the reasons, you know what I'm saying, because of that is you're not most business owners who don't have the bandwidth to go hire a CPA and I'm sorry, a CFO and pay them $300,000 a year are trying to figure these things out on their own. They're getting too many opinions. They're going and trying to get all the information on their own and doesn't know what applies to them versus having a team. So when I say having a team, though Amber and I do different things and we kind of have some overlap in what we do, when we work with clients, we work on them together because like the HRA, I wasn't hip. So now I'm like, yo, so okay, now I got to go back to the lab and be like, okay, so what's this HRA game about? Because my HSA is crazy, it's on fleek, but what's this other piece about? Because again, it's a bill you're gonna pay anyway. Like literally
Right.
for you to say that, Amber, you know what I'm saying? My oldest twin, I took her to the dentist and we got to get her braces. So it's like,
Oh.
yo, hold on,
What?
I'll at the tax lady, right? You know what I'm saying? So again, y'all, kind of the takeaway on that is build you a team. Stop trying to do this on your own. You know what I'm saying? Build you a team. One thing I'm going to share here that I wanted to share at the very beginning was this. In my space of being a fractional CFO, I find that Entrepreneurs either have one or all four of these issues. The first one is they have a tax issue. They owe taxes, they're not paying taxes, back taxes. It's just they have some type of tax issue. And a lot of that is because you're trying to figure it out on your own. You're not structured the right way. You don't have the right team. You're taking your taxes to somebody over at Liberty Tax, you know what I'm saying, or whatever the case may be, who's doing taxes for $15 an hour, and all they do is imputing your stuff. You need to have people who niche down, right? Niche down and actually specialize in your particular space, and that's super important. But before I get too far gone, they have one of four issues. They owe taxes. Next thing is they don't know how to pay themselves, which is again another tax situation as well, because you have your business taxes and you have your personal taxes. And and if you're set up as an LLC with an S corp, you're going to have two different things going on there. But if you're only set up as an LLC, the tax lady Amber already said y'all getting hit in the head for 15%. That you're just throwing in the wind by not having the right structure, the taxation optimization structure set in place. So right. Two, they don't know how, they don't know how to pay themselves. Three, they are commingling funds. The tax lady already said this without me having to step on y'all necks. Is I see it all the time, and I'm not casting the first stone here. It's not like I haven't done this as well, right? Because a lot of what I've learned from bad decisions I've made in the past. Like, okay, I'll never do that again. How do I fix that? But the commingling of funds. But again, that gets into not being structured the right way, not having your QuickBooks or whatever the case may be, so you can start to separate those things out. We'll get into that a little bit here too, Amber, while we have some time. And then last we see is not really generating real profits. So it's one thing to, on your P&L, your profit and loss statement, to say I have a profit, but unfortunately those we call them GAAP, but so that's what general accepted accounting principles is that I think that's, is that what that's
GAAP?
Yeah, GAAP. So the deal is with that, y'all, we kind of look outside of that a little bit as far as with our past program, because I've seen this a lot of times. At Amber, speak to this real quick. When folks, do their P&L and whatnot, or they're doing their taxes, and it's like, okay, you had a profit of $30,000, right?
Where is it?
Where's it at though? So speak to that real quick, because I say it to folks and they look at me like, oh, you just trying to make me feel bad. And I'm like, no, I'm trying to help you out here. So Amber, speak to that a little bit. When people are doing their taxes and they see that profit, but then we ask that question like, so do you have that in a cash account someplace? So kind of just talk about what that is a little bit.
So, I see that all the time, where people think that they're profitable in their business because when they file their taxes, they see they have a net profit, but yet their cash flow is negative. Because like you said, if you ask to see that in their bank account, where's that $30,000? They're like, I don't know. Well, it says right here on paper that you profited $30,000, so I should see that in your account. But they don't, because they're not paying themselves, and as your program, helps people be able to put that money aside, so that way when you do say you made a certain amount of profit, you have the numbers to show it in your bank account.
Yeah. It's crazy, y'all, because you got your tax accounting and then you got your cash flow and your bank balance accounting, which could be two totally separate things, and that's for a whole nother phone call. Well, that's absolutely fire right there. So we got the HSAs, we got that whole piece, the HRAs, which I'm putting down on my list right now, and I'll be talking to you offline about that whole piece, especially when we get these braces. So let's another one I bring up around this time of year, because everybody looking and trying to figure out, how do I reduce my taxable income? Hey, y'all, your retirement plans. So let's talk about IRAs and solo 401ks. I'm not going to spend too much time on it because we still want to open up for some questions. We got some questions, good questions coming in. But hey, y'all, do you know that you can actually make a contribution to your retirement plan for the previous year up to April 15th? So let's talk about an IRA for a second. You're trying to figure out how to reduce your taxable income, and you're around here trying to pull some magic and pull bunnies out of a hat. make just if you got cash available, just make a contribution to your retirement plan because again, just like the HSA, that contribution on a traditional plan is tax deductible. So
Right.
basically, I think last tax law I looked at it, you know what I'm saying, I think you can put away about 5,500 if you're under 50, and then 6,500 if you're over that, if my numbers are correct there. So let's say 5,000. So you made 100,000 this year. You're trying to reduce your taxable income. 5,000 going into your retirement plan takes your income from 100,000 down to 95. That's not including all the other bells and whistles and other tax deductions and things of that
Right.
nature, right? So, one, you're funding your retirement, and God knows as entrepreneurs, I mean, ain't nobody else funding our retirement, so you better be
Right.
funding. You better be
We don't
funding
have no
your retirement.
matches.
Yeah, there ain't no matches. So this on you. So one, fund your retirement. Two, get you a tax deduction in addition to that. And then I'll go three with it for the entrepreneurs who are watching this. I specialize in doing what's called solo 401ks. And most accounting professionals aren't familiar with this. And it's not a knock on them any way, shape, or form because this is just my lane and my specialty. And when I work with my clients' accountants, I'll jump in and be like, yo, we can do the solo 401k contribution. So the way the solo 401k works, if you're self-employed, and Amber, like with your clients you mentioned who are kind of in the service industry and whatnot, if you're self-employed, you can make a contribution to a solo 401k. You can actually create your own 401k plan. So you may have left your gig that had a 401k, you can actually establish one for yourself. I'll have to pull up my numbers here, but with the solo 401k and how it's different from the IRA, you're capped off on the IRA of contributing 5,500. With the solo 401k, you can make a contribution as a employer as well as an employee.
Oh.
So check this out. This is the fire on this one. So as an employee, you can make a contribution up to $19,000 into the
Wow.
plan as an employee. As the employer, because you're an employee and an employer, because you're
Right.
working with the tax lady, you got the, you know what I'm saying, the S Corp, so you got the business tax return and the personal tax return. With that, you can then make another contribution up to 25% of that top line revenue number. So,
Wow.
and then I believe it's capped off. I have to check the tax law, how it's going to look 2020, but I believe last year you could put up to 55,000 into the plan. So you talking about instead of trying to make up tax deductions, fund
So
your
you just.
retirement, get the tax
Mhm.
deduction on the business and the personal side, right? You know what I'm saying? But the third piece to it, which is the absolute crazy part, you can actually borrow from it. So here's the
Wow.
science on this, and this gets into a more advanced piece. So I could do a whole hour presentation on this, but I'm just giving you the highlights. When I say you can borrow from it, under ERISA guidelines, you can borrow up to 50% of the value of your solo 401k to a max of $50,000. So let this
Wow.
sink in, y'all. You can contribute to the plan, get you a tax deduction. You can then turn around, you know what I'm saying, and you're funding your retirement for two. And then for three, you can become your own bank because when you borrow from this is a true loan. So there's no penalties. You're not paying a 10% early
Right.
withdrawal. There's no taxes. You have it, and for it to be considered a loan, you have to have an interest rate on it. And let's say that interest rate is, a reasonable interest rate, 4.5, 5.5%. That interest rate is actually being paid back into your own account. So you just became
Jeez.
the Bank of Amber with the Solar 401k. So you got the tax deduction, you funded your retirement, and you became your own bank. And you can fund that with rollover dollars. So, like
Wow.
again, matter of fact, you just type in your cash app. No, no, no,
Right.
no. We chilling. We chilling. Okay, so I want to just drop that on y'all because we getting towards that end of that window. You know what I'm saying, from a tax season, unless you file the extension, and folks are looking for additional tax deductions. So whether or not this applies to you now, be thinking about that moving in even into the future. And then Amber, you kind of hit on it here real quickly. I have some other stuff, but I want to get to some of the questions that we had in here real quickly. um I know I asked you for a document. You sent a really cool one over here to me, but let's talk about some tax deductions that people miss. So we work with similar clients. Most of my clients are in the service industry. They usually have less than 5 employees. And if they do have employees, they're usually 1099 in them in the whole nine. Let's talk real quick about tax deductions that sometimes people forget about. So what's, saying, two or three of them that people, I'm saying, that falls through the cracks that they could be actually saving some money.
Okay. Well, some of them right off the rip that I noticed is the credit card fees. People are forgetting those credit card fees. So if you have Square and you're swiping, Square charge you 2.6%, I believe, and like additional 10 cents. And it's even more if you have to do a manual one. So people are not capturing that cost. They're not capturing the cost of bank overdrafts. I mean, you really shouldn't be overdrafting in your account, but in case you do, that $35 or however much your bank is charging you, you can write that off as well. Other things that I'm seeing, they're not using the tax preparation fee that they paid last year. They're forgetting that because that's a tax write-off, you know, especially if you have a business. So there's a lot of things that people are missing. And I'm one of those tax professionals, because I love what you said before, like, I think maybe months ago, you said most accountants are reactive rather than proactive. And that's so true, because a lot of these companies and CPAs that's out there, they're just mainly just trying to just hurry up and get you in and out the door. They're not going to question, they'll question maybe an expense that you have on it, but they're not going to say, hey, did you know you could do this? Did you know you could do that? So one of the things that I try to teach my clients is how to hire your kids, how to hire your spouse. You know, the HRA plan, how to make that personal vacation a business deduction. You know, I tried how to correctly do your home office deduction. And I'll throw this one out, and maybe somebody need to cash at me. So when you do your home office deduction, right?
Yeah.
What people fail to realize, usually you get the total square footage of your home, and then you figure out the square footage of the room that you're in. But you have to eliminate the hallways, the entryways, the deck, all the non-common areas, because that's not considered part of that space. So now you increase your percentage for your home office deduction. And that can give you an extra $50 or whatever more of a deduction, right? Every dollar counts in my book. Man. So yeah, people don't realize that.
Okay, so hold on. That's fire. So okay, I live so
cash at me.
right. So my spot 2,000 square feet. And I'm in my office right now, you know what I'm saying? And let's say that space is, for easy math, I'm gonna say is 200 square feet. So technically, I would be like, okay, so 10% of all of my expenses are considered a business expense. But to your point, when they gave me that square footage number, it was calculating my hallways and all of that.
Right.
When we pulled that out, then that area went from being 2,000 square feet, and I'm just saying for easy numbers here, to 1,000 square feet, just throwing it out there. Now that 200 now became 20%, and now 20. You better stop. Okay. All right, Matt. Hold on. I got to try to find some value real quick. I can't let you lead with that fire. I'm trying to see if I got anything I can pull out my hat over here. All right, so let's get to some of the questions here. So bear with me here. Got a couple questions.
Oh, before we get into the questions, can I just really, because I always try to stress about becoming audit proof.
Okay, please go ahead.
Because that is very crucial. You can have all these deductions, write all this stuff off, but if you are not documenting it the right way, then you still set yourself up for a failure of an audit should you get audited.
Okay.
So the one thing that I get all the time, you talked about commingling the accounts. You have to have a business account. And they think that's just fine. They just think that, okay, I can give them my bank statements and everything, and that's fine. But you still need those receipts. And you need them in a digital format, because why? After a couple of months, that ink starts to fade. And so people always question me, well, why do I still need to keep my receipts if they can look at my bank statements? Well, the bank statements only tell you the name of the vendor. It doesn't give you the description. So for example, Staples, you can buy personal and business stuff in there, right?
Yeah.
So if you're buying a laptop for your business at $1,000, how do they know that wasn't your own personal laptop or was for the business? Gotcha. It only says Staples. So you got to have that receipt to show that. And then I even take it a step further, especially when you're getting like assets, create an Excel spreadsheet. Okay. Where you track the serial number, the model type, and all of that. So that way, now not only do you have your bank statement and the receipt, now you have a Excel spreadsheet to correspond to that, to show that this is all business related stuff.
Word. Wow. Yep. This is amazing. I see we're gonna have to do another one of these. Okay, so hold on here a second. Let me get to some of the questions here. I got a second screen over here. I got my phone popping. Type in questions. Boom, boom. Hey, you guys are lit. Appreciate you. First question we have right here: can you set up an HRA if you're an entrepreneur independently? Any recommendations on where to set the account up at?
Well, I'm contracted through a company that sets up HRA plans for people, and they will go over your particular situation. But from what I guess, if I understood the question right, yes, if you are an entrepreneur and as you do this full time, you can definitely set up an HRA account, especially if you really have a lot of business expenses. I believe Sylvia asked, which is better, HRA or SSA?
Mm-hmm.
And the answer to that, I would say, if you have a lot of out-of-pocket expenses, then an HRA may be better because that's another deduction that can definitely bring down your income.
Mm-hmm.
So that way you're almost writing off almost everything.
Mm-hmm. I love it. And then I'll even piggyback off of the HSA, because after I tell people about the HSA and the triple tax deduction, oh man, where can I get that done? Most banks have set it up for you. So like for my local clients who are here in Columbus, I usually point them in the direction of the credit union, and all the ones who go there can open up their HSA right at the credit union. So your bank may actually have it, and it may not advertise it because it's not like they're making a ton of money off the HSA as a credit card or a mortgage or something along those lines. But with the HSA, you can usually get that at a bank where you bank at. Another question we had here: when having a W-2 and a Schedule C, when a refund is issued, how do you determine which generator to refund to determine which bank account to place the money, your personal or your business? That's interesting. Okay, so this let's piggyback on this one because I think I may have a solution, but I need to consult with you on this one, Amber. So let's say we have a husband who's working, I'm saying, a W-2, and we have a wife who's self-employed.
Right.
And then because of her deductions and whatnot, going to your point, they're filing, however they file. Jointly, anyway, her losses in the business reduces his adjusted gross income, his AGI, so they get a refund back. The question, I guess, is should they take that refund and put it into the personal account or the business account? And this is, I guess, if I'm thinking about this correctly, if we got a refund, how do you, I guess the asking is, how do you determine what triggered that refund? Was that refund triggered by the business deduction, or you kind of how they filed the taxes and getting everything they could do on the W-2 side? I guess what I would say, and correct me if I'm wrong here, is look at the tax return minus the business, and that kind of
Right.
right. Just look at the tax
That's
return.
what I was going to say.
Yeah, so whoever doing your taxes be like, okay, this is cool. Take out my stuff, and what does that look like? Oh, there's no refund. Well, shit, if there's no refund on that one, then we know with your business, that's what triggered it, and then take that and
Right.
put that into the business account. Did that make sense?
Yeah, it does. And then I would also too look at to make sure I have a rule of thumb.
Mm-hmm.
So I always compare when you look at your W-2,
Mm-hmm.
I always compare box 1 to box 2 because box 1 is your wages, box 2 is the federal withheld.
Okay.
If that amount is at least 10% or more of box 1, then that means you took out enough taxes.
Mm-hmm.
If it's way more than that, then that means that person may have generated that refund.
Gotcha.
So you can look at it that way as well. But if the business has a loss,
Mm-hmm.
then it can kind of be both because that loss is increasing that refund
Mm-hmm.
or lowering that tax liability.
Your tax, yep.
So it's kind of a matter of discretion, but it's not, if she's asking as far as how the IRS will look at it, I think it's purely up to you. If you want to put it in your personal account, go ahead, put it in your personal account or your business. It doesn't really matter. There's no IRS rule that says your refund has to be deposited, for business or your personal if you have both.
I love it. I love it. That's dope. Okay. We got some stuff here in our chat over here. So it's hard to rise to the level of an S corp because you have to make enough to be able to incorporate. I feel like I've been in that hole for a few years. Not enough take home to justify incorporating. I have a few other questions too. Amber, you jump on that one first, and then I'm gonna jump on that one.
So again, it's not always the best case scenario to become an S corp. What I look at is how much you are paying in self-employment taxes, right? So say your self-employment tax ended up being like $8,000. Mm-hmm. Now let's weigh the benefits of it.
Mm-hmm.
your bookkeeping. Now you're going to need a bookkeeper. You're going to have to do payroll taxes. You're going to have to issue yourself a W-2. You're going to have to file 2 tax returns. If that exceeds that $8,000, then you just might as well just stay where you are, because you're really not having a tax savings at all. But if it's under, then it's beneficial to go ahead and become an S corp. So if this person is saying that they're not making enough, then just stay as a LLC, because don't forget, you still get that 20% QBI deduction, qualified business deduction. That helps.
Yeah. So I'll piggyback off of this one. First, I'm gonna throw them back to you. One, if you don't know whether or not you make enough money to file as an S corp, make sure you meet with somebody like Amber who can actually run, and I've had this done before. Run me 2 different banks. Run me 2 different accounting scenarios. Run me an accounting scenario is this. Run me an accounting scenario is this, and let's just compare them apples to apples. No sense in trying to guess and well, which one is best? Nope. Get the data in front of you and see what it looks like. And you may have to pay a little extra paper just, to kind of get the 2 ran side by side, but make a decision based on real data that's on paper, so you can make a good decision. So that'd be my first one. My second one here for that person that has that question, definitely, and this will be my shameless plug right here. Go to perryjeffries.com. I have a training on there called Stop Accidentally Killing Your Business. We have an 8-step system that actually shows people how to really see where, more or less, to generate real profit in their business, not just what you put on your tax return, but actually that bank balance profit. And that could, if you watch that and get that totally no-cost training, I bet you it's going to get you moving in the right direction. And then obviously me and Amber can, kind of rock with you, and if you need some additional hands-on support. So that's a little shameless plug on that one. Got another one right here. When you have an S corp, do you issue a K1 or a W-2?
So you issue yourself a W-2 because you have to pay yourself a reasonable salary. Then when you file that 1120S tax return, whatever that net profit is or net loss is going to be the K1 that's going to be issued onto your personal tax return. So technically you got to do both, but the first things first is that W-2 that has to be issued first.
Hit you with that W-2.
The K1 comes last.
Bet. Okay, cool.
Sasha had a question. Let me just answer her. She said, when she filed, they were getting a refund. Then when she added the business wages, the refund went down. But then when she added the business expenses, the refund went back up. So is that a question? I don't think that's a question now.
Just a statement. Yeah.
Yeah, I think it's just a statement. Okay.
Oh, yeah. She just giving an example. Cool. Can you talk? We got another one right here, Kristen. Can you talk? Oh, hold on one second. I don't want to go. There's one on here. We had a comment here that said, yeah, but I hate the idea of people borrowing from their 401k, home office, vehicle deduction. So let's talk about the 401k loan here. So here's my thing on debt. And a lot of times all debt gets classified as, like, the devil. And, if it's kind of like a gun. If you don't know how to use a gun the right way, you're going to hurt somebody, right? And it's the same way with debt. So here's the deal with respect to the 401k loan piece. It's not a good fit for everybody, right? But people need to know it's an option out there. And my point to that is this. If you could borrow from yourself and pay 4.5%, why the hell would you pay the credit card 22%? It's a simple. It's basic math. So the deal is, before you if you're taking out that 401k loan to go and buy, surf and turf at Smith & Wollensky's, that's a bad look. But if we're using that in turn, so like I've helped a client increase their monthly cash flow by over $2,000 a month using this strategy, because they had the debt anyway. We consolidated that debt, was able to take the debt out at the 20%, paying the 4.5% to 5%. Now, instead of paying interest to the credit card company, which may or may not be tax deductible, because if it's a personal credit card, you can't deduct that. Now they're paying interest to themselves and increase their cash flow. So yeah, it's not a blanket solution, but when you're sitting down and you're trying to figure out what's the best way to get you in the best cash flow situation, because ultimately it's all about, and Amber, you said it earlier, it's all about the cash flow. What that cash flow talking about, right? And if I can add $2,000 to your monthly cash flow, you'll be, So again, it's not a blanket one. I threw it out there just because a lot of folks don't know they can do it. So, and granted, some people may take out the loan and completely blow it. But you know, they was going to do that with the credit card, a credit card
Right.
debt anyway. That's what they're going to do. But if they're going through a systematic approach of doing it, why not pay yourself that interest versus paying a company where you can't get the tax deduction anyway? So just kind of just my 2 cents on that piece. But I want to make sure I address that because a lot of people are like, ooh, I don't want any debt. Okay, do you already have debt? Yeah. What's the interest rate on that debt? Okay. And then
Yeah.
we back into the numbers, right?
Right.
Boom,
I think
boom.
she had something else too about home deductions and vehicle. So I'll
Yeah.
talk on that. So going
Hold on.
back to the home office deduction,
Yeah.
some things that people often forget in that as well is that your pictures, the bookcase, your desk, all of that stuff is part of that deduction where you can depreciate your desk. What else? Yeah,
No, let's
all
talk
the
about
good stuff.
let's talk about the vehicle. So this is one that people don't think about, and that's why I'm so big on folks using technology and QuickBooks and all of that because you miss stuff. So like I'm saying, I'm downtown and I got to jump into a meter to go and meet my attorney, right? That's a deduction, you know what I'm saying? Because I'm in a meter, boom, you know what I'm saying? This is a business expense, right? So you may be missing money on meters. And I think I saw one of my cats on here from DC. I know they getting hit in the head out there in DC at the meters. So I mean, it's those little things that you're paying anyway. And that's why having kind of like that home-based business or being in that model and having the right tax professionals on your team is so important because you're not even thinking about that. So you got the vehicle deductions. Shoot, if you're using your vehicle when you go to get it maintenance, if I'm not speaking incorrect on that, Amber,
Well,
can't you deduct some of
when
that
it
too?
when it comes down to the vehicle expenses, the IRS says you can do one or two things. You can take the mileage deduction or the actual expenses. So the actual expenses is if you're financing the car, the interest of that, your gas,
Yeah,
tolls, car washes, all oil changes, all of that. Or
yeah,
you could take the mileage rate. I always tell my clients to start off with the mileage rate first, because if you do that, then you have the option to go back to actual if you needed to. Versus if you start off with actual, you're kind of just stuck in that spike. Because if you want to go back to mileage, then you're just stuck, right?
Gotcha.
So, and 9 times out of 10, the mileage gives you the best deduction anyway. And 2, going back to the home office deduction, if you have a home office, do you know every time you leave your house, that is a tax deduction? Every time you get behind that car, it's a tax deduction, because there's two different stops that the IRS has. They have temporary stops and regular stops. So regular stops are, you go into the post office, you go into the bank. Those are regular stops. Temporary stops are when you go into a networking event, you're meeting with a client, things of that nature, right? So if you don't have a home office deduction and say, I left my house and I wanted to go to the post office, that's not a write-off because I don't have a home office. But if I had a home office, then I could go ahead and I can go write off that expense. So if you don't have a home office and you want to be able to make your travel 100% deductible, it's all about planning. So this is what I tell people. Since you need to make your first stop a temporary stop and your last stop a temporary stop. Everything else in between is deductible. So say you wanted to go visit your mom in Columbus or whatever, right?
Yeah.
So before you visit your mom, make sure you see a client on your way to your mom. Now you go see your mom. So now you're visiting with your mom. Now you want to go out and now you got to go to the post office or whatever little errands you want to do. Then you make your last stop. Say you got a networking seminar to go to that night. You make that your last stop. So that whole trip from when you left your house is tax deductible if you don't have a home office. If you have a home office, then you don't have to worry about all that planning.
Wow. Okay, so check it. We got more questions coming in, but we'll probably have to schedule another one of these, Amber. But let's do a quick rapid fire. We got 5 minutes. Let's burn through some of these questions, and obviously, folks can reach out to us to get more detailed information here. So let's jump on this one here real quick. Can you talk more about qualified business deductions? Give us about 15, 30 seconds on that one, if you will.
All right. So with the new law, they put in place where you get 20% of a deduction off of your net income of the business. So if you made $10,000 net profit, you get a 20% deduction, which is what, $2,000 off of that.
Okay.
but it's subject to limitations. You know, you have to make a certain, if you go over a certain amount of money, then it kind of phases out, whatever. If you become an S Corp, if your W-2 exceeds a certain amount of money, it kind of will phase out. So that's why sometimes it's maybe more beneficial to stay as a Schedule C versus the S Corp, because you get that 20% deduction.
Got it. Okay, cool. We got one right here. I'll jump on this one. What are reputable companies that offer solo 401k plans? Is it technically called a 401k? So to answer this person's question, they're either going to call it a individual 401k or a solo 401k. Our 401k is an employer sponsored plan. So that's why we have them at our jobs, because our employer sponsored that. If you're independent and entrepreneur, self-employed, whatever the case may be, then it's called a solo 401k or a individual 401k. As far as reputable companies, this is pretty much I don't want to say a self-directed, because people use that interchangeably, but the deal is, it's not, is the company reputable, is the advisor you're working with know what they talking about. That's what it's coming down to, because you can go to the bank and say, hey, is there somebody here who can open up a solo 401k? And if they have an investment arm or financial advisor there, somebody should say yes. So your monies are held in that account, but again, it's your 401k. You're the owner. You're the sponsor. You're the one controlling it. So the deal is, you just need to find an advisor who understands that, how the solo 401k works, to be able to guide you and advise you on it. But as far as opening up the account, you can do that at a Schwab, TD Ameritrade, a bank, whatever the case may be. If it has an investment arm, you can open up a solo 401k. Just the question is, do you have the right advisor to be able to advise you on it? Because there's some moving parts to it. You got to have a third party administrator. You got to have the advisor. You got to have the custodian. So it's moving parts to it. But as far as reputable companies, it's not technically, do you find a reputable company? Do you find somebody who knows actually what the hell they're talking about? So that's on that one. This one right here, Amber, I'll let you take this one. Can you recommend a user-friendly, efficient accounting software that easily integrates with bank accounts, spreadsheets, etc.? What you got?
Okay, so there's a couple of them out there. There's one called Zero, and I believe it's like $9 an hour. It's similar to QuickBooks, but I know that definitely integrates with your bank account, so that way it's easy for you to do bank reconciliations and things of that nature.
Okay.
There's also a great app out there that tracks your mileage. As soon as you get in the car, you can snap a picture of your receipt, also enter your income in that as well. So that's a good app as well. It's called TaxBot.
Yeah.
And then to piggyback, Sylvia had a question. Do she needs to keep gas receipts or keep track of mileage? Well, if you feel mileage is going to be the better benefit for you, then you don't need to worry about tracking any of that other stuff. You just really need to keep track of your mileage and have a mileage log, or use an app that's able to track the mileage. But if you don't do a whole lot of driving, then you may want to do actual expenses. Yeah. And then that's when you would need to keep track of your gas receipts, your oil changes, and things of that nature.
Yep. Bump up to her other question that she had before that, Amber. So I'm building a home office in my basement. Can I write the bathroom off my home office?
I'm building a home office. I don't think she can write off the building of it. I have to look into that, because I know if it was like a rental property, then that's like a deduction. But as far as you building your own personal home office, I don't have to look more into that.
And that's and I'm gonna jump on that one real quick, y'all. And what's dope about having professionals, we're just like you guys. We may not know the answer right now, because I get hit with that all the time, but we know where to look. And because you may not know where to look, she knows where to look. So Sylvia, we'll circle back to you on that one. That's really dope. I saw Doc come in here. She wanted to talk a little bit more about hiring your children. I'm going to give you what I know about it, and then I'm going to throw that right off to you, Amber. So I was put on to a strategy where you can actually hire your kids and then use their income to make contributions to their IRAs. And I was like, yo, that's crazy. So you can actually have a child and be like, okay, my child is helping with my marketing. She's over here stapling stuff or whatever the case may be. Pay her, you know what I'm saying, hourly, and then take that money that I was paying her, which actually reduces my business income because that's money going out, right? And then I could take that money where she don't have to pay taxes on it, and then throw it into an IRA. And now she actually has an IRA being funded before, you know what I'm saying, she's 14, 15, 16 years old.
Right.
So I saw that strategy and it's like, yo, that's absolutely fire. But I'll hand the baton off to you now, Amber. What else can you speak to that one? Because that's a really good one.
So that's definitely, and most times people do that, but they also could use it to fund, their child's future wedding or whatever. You can, use the money for that. But the one thing that I want to point out is to make sure the child is under 18, because if they're under 18, they're not subject to Social Security tax or Medicare taxes, right?
Okay.
You do have to put them on payroll. So they do have to get a W-2. You cannot issue your child a 1099.
Huh.
Okay. You can't do that. They have to make sure they have their own bank account too, because you have to pay.
Okay. Hold on. You about to drop this fire on them, but I got to interject. Yo, you have to issue your child a W-2, which means you got to be set up as a business in the first place. You can't issue a W-2 if you ain't got a business. Keep going. My bad.
So yeah, they gotta have that bank account or whatever, because the IRS wants to see that your company issued them a payroll check and that they deposit it into their own account, right? Yeah. And it's a great strategy, because if you already giving your kids allowance monies for helping around the house or whatever, you might as well use that as a tax write-off.
Stop.
But if you want to know about how to determine what hourly rate you should charge them, call around various temp agencies. Say, hey, how much does it cost to do this kind of administrative work? And they say, oh, $25 an hour. So then you go pay your kid $15 an hour.
Stop that.
Right?
Don't.
But make sure they have a timesheet. Yep. Make sure they write down, what they're doing. Make sure you as the parent is signing off on it. Make sure they have a W-9 on file. You got to have all of that. Just because they're your child, you still got to treat them as an employee and have to have systems in place.
And let me go back and say it again. You can't do this treating your joint like a hustle or a hobby. You got to have the system and it has to be organized in place. So that means having business bank accounts, EIN numbers, things of that nature. The stuff that people are, oh, I don't want to do all of that. You got to do it. And the deal is, if you don't want to do it, work with some professionals who can help get it done for you. Okay, this is going to be the last question, because I feel like we could do this all night. The question was, so I have a freestanding building. Can I have a home office also? And can you have this if you are renting or owning a home? So I know I can answer the back end of that. I know they can deduct whether they're renting or owning. But how does that work if they have, so I have an office, I have a brick and mortar freestanding office. Can I still get home business deductions? That's a good one. I don't know the answer.
Oh, okay. So this person is asking if I have a home office, but I also have an office that I travel to do whatever. So yes, but the key thing here is you have to make sure that you do 90% of your administrative work in your home office. So that means you're crazy. So that means you gotta make sure, if you're doing your bookkeeping, you're studying for an exam, like if you have to take an exam or something, you're reading, studying, whatever, all of that stuff has to be done there. Don't do all that at the other office, because then you can't qualify for the home office deduction. So that's how you do it when you have two offices. And you can
double up on it. Okay, you know what? I would drop my headset, but I paid $20 for it. I don't want to break it, because we should drop the mic. But if like, I would just drop it on the floor right now, but it costs too much money. All right, so check this out, y'all. Fire tonight. And this is exactly what we wanted to have. It's just a conversation, y'all. You know what I'm saying? Like, this is what professionals talk about behind closed doors, right? When I'm talking to Amber and we're working on a client, it's like, yo, and it's crazy because we have a mutual client. And the client be like, hey, Perry, what documents do I need to send Amber? Or they'll copy us on it. Okay, Amber's got me set up over here. That's how it should be, y'all. Because when you're running your business, you don't have time to know all of this information or to learn all of this. You want to have, enough to know, okay, I need to go and work with a professional, because right now, if I added this up, we'd probably say, folks, you know what I'm saying? I mean, we've given y'all so many different tax deductions and strategies in here, and it's keeping more money in your pocket. What's so crazy about it, we ain't changed. We ain't said nothing about how we're going to make you more money. This is off the money you're already making. and how much more money you can keep in your pocket. And that's where the fire is right now. So, Amber, when folks want to get with you, the tax lady, and you know, have a professional to work with you, how do they get in contact with you? How do they connect with you? Get in contact with you? What? Tell them what's up.
Okay, so my number is the easiest thing to memorize. So it's 860-474-3700. Again, that's 860-474-3700. I'm on Instagram as Amber the Tax Lady. I'm on a Facebook business page that's Whitehead Tax and Financial Services LLC, and then my website is WTFSLLC.com. It's just the initials of the business.
Yep. Amber, do this for us while I go through my little pitch at the end. Type your stuff. Are you in a position where you can
Okay.
type your stuff? Type your stuff in the chat so they can see it, and then I'll copy that and thread it on the Facebook Live too. And then, so again, my name is Perry Jeffries, the Profitologist, your entrepreneur CFO. If you want to connect with me, go one place. You go to perryjeffries.com. I'll type that in as well. That's PerryJeffries.com. On that website, the first thing you're going to see is the opportunity to get our no-cost training, Stop Accidentally Killing Your Business. We've created an 8-step process to ensure that your business is profitable, you increase revenue, pay off debt, and don't accidentally kill your business. And a lot of that is some of the strategies that Amber and I have discussed this evening, and much, much more. It's levels to this, y'all. Please understand, there's levels to this. And just so you know, it's not a scenario of do I want to work with Amber or do I want to work with Perry? In an ideal situation, we can be your financial team, right? You know what I'm saying?
Right.
Having your accountant, having your CFO, they should be talking to each other and having that open line of communication. That's how you win and nothing falls through the crack. Because understanding, if you're trying to do it on your own, you have blind spots and you're gonna miss some shit. That's just the nature of the beast. That's just what it is. There's no way of getting around that. So that's why you have the right professionals on your team so you can do that. So take advantage and definitely go and check out our go to perryjeffries.com. And if you want to connect with us, you can connect with me on there. Make sure you join our entrepreneur wealth building community on Facebook. You can find that right on perryjeffries.com. Just go to our free resources. You have our YouTube, you have our entrepreneur wealth building community. We drop gems on there all the time. And then if you're interested in our past program, watch the video and schedule a strategy call where we can get you all the way live and together. So that's all I have, y'all. Shameless plug. I'll plug my stuff in here real quick too, just for everybody before we get off. Just go to perryjeffries.com. You'll find everything you need there. And then last but not least, Amber, I feel like we have to do this again. The feedback we getting, Kat, you know what I'm saying? Cass is loving this information, said lots of fire. So we may have to do this again here soon. So we'll do that whole piece. But one, thank you for bringing them gems tonight and that fire. Like, when I can learn something, I'm excited. Like I said, I was about to jump on my chair a couple times. Like, oh my God, the twins about to go to work. Everybody get a W-2. So you get a W-2. You get a W-2.
You get one.
So I appreciate you jumping on here, man, and just showing us love. And y'all, man, definitely connect with Amber. If you don't have a tax professional on your team, you're tripping. And again, my name's Perry Jeffries. But Amber, anything else before we go, mama?
No, that's pretty much it.
Okay, cool. Well, again, Perry Jeffries here, the Profitologist, entrepreneur CFO. Make sure you connect with us so you don't miss all the free content we give them. We ain't even charging y'all for this. This is just on the love. All right, y'all. Peace.
All right, bye, y'all.